Hi, I'm Rob.
And I'm Rob.
And this is Ask Rob and Rob.
Welcome to Ask Rob and Rob. Thank you for joining us for 2 more listener questions and 2 more answers. Those questions coming up in just a sec. But it's so easy, Rob, to send your question our way.
It certainly is. We've collected it in all one lovely place for you. If you go to propertyhub.net/ask, you can find our number. You can leave a message directly there. And you can also leave questions for our weekly column in the Sunday Times. What a lovely collection. And you could do it all at propertyhub.net/ask. So if you have a question, make sure you get it in there. This week, our first question comes in from Nick.
Hi, Rob and Rob. Great work with the podcast. Listen to you every Thursday. Quick question. I've been a landlord for about 10 years. I own one buy-to-let in Dorset, which is profitable and is really good with passive income. So I understand a bit about the market. My brother and I have come across about 350k in capital, and would just like your thoughts. If you were where would you put that 350 right now based on what you know about the market and the future market? Would you look at long-term passive income, or would you look at property refurb with a view of flipping to maximise quick gains? I know it depends on what my strategy is and what my future outlook would be, but if I were to say to maximise capital growth in the short term, hopefully that'll give you enough information to give me a steer on what you do if you were I. Keep up the good work. Thanks for your help. Bye-bye.
Thank you, Nick. Now, I can't give you the answer, but I can give you a framework to use to come to the correct answer. And in addition, I can give you some guidance on what strategies are working quite well in this environment right now. But first of all, how to go about making these decisions? Well, start with the end in mind. You need to get a goal. And that goal is always best to have some emotion attached to it. Just saying you want to become a millionaire, or even less specific, you just want to be really rich, then it's not that good of a goal, because what does that mean to you? So try and make your goal important to you. So it may be that you want to retire early. It may be that you want to help charities out. It may be that you want to pass your money on to others. It doesn't matter what it is as long as it's important to you. Now, once you know what that is, try to put a financial number against it. So what would that cost? What do I need to achieve financially to be able to live that goal? Then you're really starting to make progress because you've got a destination in mind. Now, once you've got that destination, you need to start, and that's where you pick your strategy. And if you're in it for the long term, that will also help dictate on what you do. So you've mentioned long-term passive income, or you've talked about refurbing. Both very, very different. And it will depend on, are you in a rush to make this happen, or can you give property time, which is always the less risky approach to this. But if you, for some reason, are very short on time and you have to hit your numbers very, very quickly, then you can look at something a little more aggressive. But for most people, they can give it time. And although the allure of quick gains and riches sounds very appealing, every strategy that potentially can offer that also comes with huge risk, and you can end up losing money, not making money. It does happen, and it's not talked about very often. Now, on what strategies work in this climate and this market? Well, we've released a podcast on that very subject recently, episode 553, so check that out. And the focus of that podcast was on strategies that are working, but also strategies that are really struggling and possibly not working at all in this current economic climate. So that's a really good podcast for you to listen to, and anyone else listening right now. So I know I've not said go and buy a property in Manchester or a flat in London, because that's not actually that useful. But hopefully what I have given you is a useful framework and some good resources for you to use and make the best decisions.
Okay, let's listen to our second question. This one's from Dalia.
Hello, I have a question related to a buy transaction of a property, a long time between the exchange and completion. In particular, in this case, the timing between exchange and complete is about 10 weeks. So I would like to understand whether that is a common practice and what are the risks for the buyer in this instance. Thank you.
Thank you for your question. And this is a nice, easy one. So having some kind of gap between exchange and completion is pretty common. If it's a new build property and that property hasn't finished being built yet, then there could be quite a substantial gap between exchange and completion. And that does introduce risks. Those risks can be controlled. And indeed, we've got a YouTube video about how to benefit from buying off plan while controlling for those risks. So we'll make sure we link to that one in the show notes. But in this case, you said that it's about a 10-week gap. So I'm imagining that's not the case. So in this situation, there's not really anything to worry about. So the key thing to be aware of is that when you exchange, that is the point at which you are legally committed to buying the property. So you're every bit as committed as if you'd picked up the keys and moved in. You can't get out of it. You can't renegotiate the price. You can't do anything after you've exchanged. So you need to be completely happy at that point. Once you've exchanged, if there is a gap between you complete, then of course the property market could move. It could move in your favour or it could move against you. So if it moves against you, you might be feeling a bit aggrieved. I could have negotiated a better price. But in reality, if you'd completed simultaneous with your exchange, then you'd already have owned the property and it wouldn't be any different. So I wouldn't consider that a risk. The one thing to be aware of is that if you're buying with a mortgage, your mortgage offer will have an expiry date. Mortgage offers can last up to 6 months. Sometimes it's 3 months. It depends on the lender. But you'll need to make sure that that offer hasn't expired at the point at which you complete, because that's when you're going to be actually drawing down the funds. So if this has been dragging on for a while, as property transactions can, but it's gone out of date by the time you complete, that could cause you issues. But in general, this is a normal situation. So as long as you're working with a good solicitor and a good mortgage broker, if relevant, they'll be able to alert you to anything that you should be aware of, and it should all go through smoothly. Thank you for those questions. We'll be back to answer more questions next week, and we'll be answering questions in the Sunday Times, of course, on Sunday. But before then, we'll see you for the Property Podcast on Thursday. Until then, have a great week. Bye-bye.
Bye-bye.